Hi, I'm going to walk through how to use Hive Tax AI tax planning tool to strategize on a high net worth individual clients' investment income tax efficiency strategies. So take a look at our client name is Bob, and he's definitely on the top tax bracket, has a substantial amount of W-2 and investment income for both year 2023 and 2024. So from this chart, you can tell he has over 72,000 qualified dividend income, 30,000 interest income, and over 11,000 long-term capital gain, and 147,000 short-term capital gain. So in this case, I'm particularly interested in investment income tax efficiency. So I asked our AI assistant to assess the efficiency of Bob's investment income. Okay, how efficient is Bob's investment? So our AI assistant built with Bob's tax return and all the tax planning strategy, and did a detailed analysis of his 2023-2024 investment income. So overall, the efficiency assessment is good, but there's definitely room for tax strategies. Okay, so our AI assistant suggested two strategies, number 5 and number 6. Okay, number 5 is the shift to tax efficient vehicles such as ETF, and number 6 is direct indexing. Now, from the tax return we uploaded, our AI assistant doesn't know where Bob invested in his assets. Most of his investment is actually SP 500. So we filled a questionnaire. We say Bob's investment is mainly in SP 500. So let's take a look at strategy number 5. Okay, so the strategy number 5 is to suggest shift the taxable equity to tax efficient vehicle ETFs. Now, if you look at here, so Bob does have over 5 million invested in a broad SP 500 index fund. Assume mutual fund structure currently, or another vehicle, and that distributes capital gains. So in questionnaire, we filled out that Bob invested in SP 500 index fund, but we did not specify actually is ETF. So that said, Bob already invested in ETF. So this one, the strategy does not apply to Bob. But strategy number 6 could be a great fit. Strategy number 6 is direct indexing. Okay, in Bob's case, because 90% of his investment in SP 500, and given the amount of his investment, his high tax bracket, direct indexing could be a great strategy for him. Direct indexing replaces a single SP 500 with a separate managed portfolio of many of the underlying stocks that create more opportunities for tax loss harvesting. Now, direct indexing is complex. It requires a lot of upfront work. This could be great strategy for financial planner. Have a conversation with a client like Bob, and if Bob buys in the strategy, I think that this could be lead to some additional advisory work.